What's up? What's up? Let me turn this music down. How are you guys doing today? Man, the market fell really hard today. I'm gonna wait for a couple of people to come in so that I can answer some questions. But for now, let me pull up some charts. If you notice, the market was down pretty heavy today. The Dow, the DJIA, was down about 420 points. The Nasdaq was down 145. The S&P was down 47 points. And this is the first day of the year, so I guess there was a global sell-off in China, and all the markets followed. If you notice here, these are a basket of stocks that I own. And, I try to let everybody know exactly what I'm buying. And I'm actually scared to see how down the my stock portfolio is, but whatever. Let me show you guys some. Let me pull up the day trading charts. Today, I saw that the market was down earlier. Profited $240 today. This is for the advanced day traders. This is the 1 minute chart. If you notice, there's a red arrow at the top, and I don't really want to go into detail on how I day trade, but once I see that arrow, I like to short. And for you beginning traders, if you don't know what shorting is, if going long or going short, you need to go Google it. That's your homework for tonight. The 15-minute chart also showed an arrow. So right around 9:30, I took a trade, and I'll give myself about a C- today on trading. I shorted the YM today, which is the mini Dow futures. I shorted right around the 16,998 level, and it dropped to about 16,860. To give you an idea of how much money I can or cannot make, one contract of the YM is about $4,200. So you need $4,200 in your account to purchase one contract. And for each dollar move, let's say it went from 16,960 to 16,961. For every dollar move, you make or lose $5. So I was shorting today around the 16,998 level. It dropped to about 16,860 in a matter of about, wow, let's see what time. It looks like it dropped it dropped over 100 points in about 3 hours. So that's about $500 you could have made or lost shorting today. And in the market, guys, you can make money going long, which is going up, or you can make money when everybody's in panic mode and the stocks are going down in price. And I decided to short today, and I capitalized, but I didn't make as much money as I could have. So that's for the advanced day traders. All right, I think we have enough people on now. I can start answering questions about the market. All righty. And I have a couple of questions that were already sent to me by email that I want to answer. The first question was, is it worth it to buy only one share of stock? Guys, it's worth investing in any stock. When you make an investment in yourself, it's going to pay off in the future. You should always be investing in something because you always want to have money that you have access to in case something happens in the future. I promise you the amount of money that you're investing in these stocks, you would end up buying something that you really don't need. And in the future, even if that stock goes down in price, it's still going to be worth something in the future. So I always encourage you to buy stock. The next question was, how do people invest in privately held companies? Well, unfortunately, I personally don't invest in privately owned companies. I only invest in publicly owned companies that are on the stock exchanges. And I encourage most of you guys to go that route too. You can invest in privately owned companies, but it's not the same. You're going to have to know somebody on the inside, and it's usually a large sum of money that you're going to invest, in the upwards of tens of thousands or to a million. And you actually want to get in early on privately held companies because when they do become public, they usually inflate the price, and that's where you make most of your money. The next question was, what resources do you recommend for making good decisions to buy? And what are the steps? The resources that you should be using is your charting systems from Thinkorswim, or your charting system on whatever brokerage that's holding your money, like Scottrade or E-Trade. You can go into their systems and you can always pull up charts. You always want to pull up, the last week, the last month, the last year, so that you'll know how high and how low that particular stock fluctuated, to give you an idea of how much you can make realistically. The same thing you would do if you were buying anything. Take the same approach. If you're going to buy a house, or if you were buying a car, or if you were buying a special shirt, you would always, you'll go on Amazon or Google or Zillow, and you want to look at what prices are out there and compare them. And then that'll let you know if you're making a good decision or not. What resources and questions should I ask myself after I buy to determine when I should sell? It depends on the individual. What I like to do is, if I buy a particular stock, I will not sell that particular stock until it's up over 100%. And then usually I'll sell half the shares, or I'll sell all the shares and put the profits into another stock. Like I told you guys before, when I decide to buy a particular stock, I don't throw all my eggs in one basket. If I'm going to risk $100 on a stock, I usually buy it in stages. I buy $25 and to see what's going to happen with the stock. Usually it'll go down, and then I'll buy another 25 shares. And once it drops again, I'll buy another $50 worth, and then I'll hold that position until the stock reaches the level that I believe I should take profit in. And it's stock specific. It depends on your risk tolerance and your realistic expectations. But that's why you need to always go back and look at your charts to understand realistically how much that particular stock can do. If in the last year it's only moved 20 or 30% up or down, then realistically in the next year, the most it can probably move is 20 or 30%. If you have a volatile stock that's, going up or down 50, 60%, that'll give you an idea that it'll probably take about a year or a year and a half before that stock actually reached that 100% level. So these are things that you should write down and go back and look at. The fifth question was, why are shares in some smaller companies more expensive than shares in very large companies? And that makes a lot of sense, because Apple right now is a $115 stock. And if you wanted to go and buy Google, I believe Google is in the 800, 700 range. So does that mean Google is worth more than Apple? Not exactly. Different companies have a price point that they put their stock at, depending on how many shares they want the world to have. So even if you hear a company, let's say their stock started out at $1,000 a share, just like Apple did, and they do a 10-to-1 stock split, which takes the stock down to $100. It doesn't mean that the company lost value. It just means that they wanted the value to be lower so that more individuals can purchase the purchase that particular stock so that it can make the stock rise. They have different points that they might want their stock price to be. You know, some companies like Google, they know that a lot of hedge funds buy their stocks, so an $800 stock price might not mean anything to them because a hedge fund is going to buy millions and millions of dollars worth of that stock. So they don't really mind the stock price being at a higher level. Whereas Apple is actually the #1 company in the world. No other company in the world is valued more than Apple. But their stock price is $100 a share. So they're the #1 business in the world, but their stock price is valued, well, their stock price is at a level where just about anybody can own it. And that's probably why they're the #1 company in the world. So never get, and I mean, even if you had, like, if you have $1,000 and you invested in an Apple and it was $1,000 a share and it moved up 20%, even if you had 10 shares of Apple at $100 a share, 20% is 20%. So it really doesn't matter. It matters how many shares you purchase, but the movement of the stock price is the only thing that matters. All right, the last question was, what happens if you own shares and they get bought out? In some cases, that's actually a good thing. If you own a particular stock and somehow a bigger company comes along and they buy that particular company out, your shares are protected. Usually when another company buys out a smaller company, they'll buy it at a higher stock price anyway, so that the shareholders of the old company would be happy with the profit that they've gained with the bigger company buying them out. So if you own Apple at $100 a share and another company comes along and says, hey, we want to buy Apple for $150 a share, of course you gain that profit, but nothing happens. You don't have to, there's no process that you have to go through or any paperwork that you have to go through. They're just transferred over to the next company. So if there aren't any other questions, I will definitely, have you started trading in Bitcoin? You know what? I was interested in Bitcoin, and then so much negative news came out about it. I actually am just watching it for a while just to see what happens, because Bitcoin, let's be honest, Bitcoin, the way Bitcoin works, it's, you put all your money in a particular stock or a particular bank, and there's no way that they can trace your money. So, a lot of the villains and a lot of the people that want to hide their money, that's the first place that they went to put their money. So until a lot of the individuals that work for Bitcoin stop going to jail, I'm not gonna advise anybody investing in Bitcoin or even putting their money in it. Any other questions? All right, well, you guys sure? Because I'm signing out. I'm answering questions today. Do you see the benefit of peer-to-peer trading? Definitely. You always want to, like, I'm a scientist at heart. So when I started trading, I created like over 150 strategies. And there were strategies I created. Nobody really told me what I should be doing. And for a long time, I traded one way. And I just recently opened myself up to other trading strategies. And it's so funny because I think I wasted a lot of time because technology has gotten better. There's always going to be someone that has something that can help you in what you're doing. So you should always keep your eyes and ears open to different people and different strategies that can help you, help you in your trading strategy or help you in your business. So peer-to-peer is actually cool because you can see how other people are trading and what they're trading and why they're trading it. So I definitely encourage it. Any other questions? Hopefully I didn't miss any questions. All right, well, I'm going to sign out. And every Monday I'll have a Q&A. And you can also follow some of my day trading. So I'm day trading for the advanced day traders, and I'm also answering questions for the beginning novice traders. So hopefully I answered some of your questions, and I am signing out. Peace.